Now, what are the components for pension expense? If you remember, of course, service cost, which is the major component of current year's pension expense, and there are a few other costs such as interest cost, which we calculate based on the beginning balance of PBO, and interest rate, which we also call its settlement rate. And then we also adjust pension expense with expected return on plan assets, and that return actually reduce your expense. And in some cases you might have prior service cost amortization. So we will now see one example, and you have several items that are given here, and we will focus on each item. We'll calculate the pension expense for Veldry Corporation. So they have their service cost. Of course, service cost we will include when we're gonna calculate the pension expense. So we will have service cost, which is 90,000, and then we have contribution to the plan. Remember, this contribution to the plan actually cash contribution made by the employer, so which reduces employer's cash, and at the same time it increases the plan assets, so it's not a component of expense, so we will exclude that. Prior service cost amortization, yes, we will include that one, what it is. So if you have any amendment in the middle of the plan, and we usually do the amount adjusting with or debiting with OCI, and then we gradually amortize it based on the remaining service years. So this is the amount for this year we will amortize for prior service cost, which is 10,000, so it will be added to our pension expense. Actual and expected return on plan assets. Yes, return on plan assets is also a component of pension expense, but it will reduce the expense, so we will subtract it to calculate the pension expense. And then benefits paid. So if you remember from your conceptual slides, when benefits are paid to the retirees or retired employees, it actually reduces their PBO or that pension liabilities, and it also reduces their plan assets. So this benefit paid is not a component of pension expense. Then you have the beginning balances of plan assets and PBO. So these are just beginning balance we need to know to calculate the interest cost. And you have accumulated OCI. Well, accumulated OCI, for different reasons we can amortize apart, either for smoothing by using the corridor approach, or if you have prior service cost amortization. So we actually included everything, but now the last thing we need to calculate, which is the interest cost, and it will be calculated based on these interest, discount, or settlement rate, and using this PBO balance. So 10% of 700,000, which is 70,000. So of course it's a cost or expense, interest expense. So if we consider all these, 90,000 add 10,000 add 70,000, and then subtract 64,000. So this will be your pension subtract 64,000, it will be 106,000. This will be your pension expense for 2025.